And welcome back to CMG Oral Space Lessons. I'm Emmanuel. You can call me Kujo. And this series is for the intermediate forex traders, for the intermediate, someone who just have information on the basis of forex, and now have to move to the second stage, which I call the intermediate. And then this one is on candlestick patterns. You have to master them, mastering them. And then we are treating the number of videos that we have done. And this is episode 17, right? So it's better you start from the beginning so that you can actually understand whatever we are doing here. So we are going to continue with what? Trading pin bars with Confluence, right? Confluence means a number of factors to actually give you the conviction that you can finally decide to trade by buying or selling the market, right? Now, confluence happens when many technical indicators generate the same signal, right? This trading concept is used by price action traders to filter their entry points and spot high probability signals in the market, right? So you look at a number of factors. When they are in line, then you decide to do what is it that you want to do. It doesn't matter if you are a beginner or advanced trader. Trading with Confluence is a must. Everyone does this. Every trader does this because it will help you focus on quality setups rather than quantity. So quality is important. In fact, in every aspect of life, quality is important than the quantity. And it will give you and to enhance tremendously your trading performance. Confluence means combination or conjunction, right? Combination or conjunction, or yes, combination or conjunction. It is a situation in which two or more things join or come together. So we are taking this term from the literal perspective, right? The literal meaning of that. So it means combination or conjunction. It is a situation in which two or more things join or come together. For example, if we are looking for a pin bar signal, we need to find other facts of confluence, right? To conform, or in fact, to confirm our entry. We are not going to take any pin bar that we find on our chart. This is very important point. The fact that we are going to trade pin bars, it doesn't mean anytime a pin bar forms, we are going to enter or buy. We are going to enter buy or sell. No. We will look at other factors to give us that conviction. Then we cannot decide. Factors of confluence. One, the basic ones, right? If you are a beginner or intermediate trader, these should be your factors of what? Confluence. These are the things that you have to consider. In fact, we have looked at them a number of times. We are just going to add some few terms. Then I think we'll be good to go. The trend is one of the most important factors of confluence. This is the first thing that most successful traders look for on their charts. You can't trade any setup without identifying if it is in line with the direction of the market or not. A bearish pin bar in the downtrend is more powerful, right? Signal is a more powerful signal than the one in the range band range, right? Support and resistance levels that will be true, and demand and supply and demand areas, right? This is another factor that you have to look at. These major levels are significant importance in the market. They are very significant in the market because all big participants watch these specific areas. So we know resistance level, you know the support area, you will also add to the supply and the demand levels, right? Now, moving averages. Sorry about that. I personally use the 8 and 21 moving average. This technical trading tool acts as dynamic support and resistance. It is very important factor of confluence in trending markets. I think we started in the recent video. Now we have another technical tool called the Fibonacci retracement tool, right? It is mostly used in the trending markets, either uptrend or downtrend. That's what we use. Now, I use the 61% and 50% Fibonacci retracement to find the most powerful areas in the market. We will have the time to look at this in depth, so don't worry, in depth. Now, trend lines. Drawing lines on your charts give you, in fact, drawing lines on your charts give us an idea about the market direction and help us find the most important reversal points in the market. Trend lines will help you know if the market is going to reverse or continue in that sense. When you are analyzing your charts, you are not obligated to find all these levels to determine whether the trade is valid, or not, right? You just have to look at some few factors, right? You narrow things down, find your niche. If you can find just one or two factors of confluence that come up together with a good pin bar setup, this is quite enough to make a profitable trade. So in as much as we are talking about factors of confluence, too much of that can be confusing. Get at most 4 or 3, and you are good to go. Some people even only have 2 factors of confluence. When they see the 2, they are good, they will enter. And that may be working for them. The important thing in this profession is that what actually works for you is what you have to keep doing, keep practicing. That is as simple as that. For example, an obvious pin bar signal near support, right? Pin bar near support or resistance level, in line with the trend, in line with the direction of the market. So if it's at the resistance level and it's a bearish one, you can sell. If it's at the support level and the pin bar is formed, depending on the type of pin bar formed there, then the market will buy. So let's have a typical look. This is EUR/USD. We will look at the pairs later in the basic or the beginner's class, right? So we look at the pairs. So EUR/USD, this is a 4-hour time frame. The 4H means 4-hour time frame, and this is an uptrend market. The markets are moving generally up, right? So that is what it means. Good. Now, yeah, this is uptrend market. We have the 24 moving average, a dynamic one, because drawing a straight line, we might not get it. So we are using the 21 for the support level, right? And then we have the support, the traditional support line also there. So you see, we are adding a number of confluence, a number of factors. We use our support level, that's the horizontal one, the traditional one. And then for the trend line, we can't draw a straight line. So what we do, we use the dynamic one, which is the 21 moving average, the dynamic support level. Then the last important thing to consider is the type of the bar or the pattern forming. This is a hammer, a pin bar, a bullish one for that matter. So the market is going to go up because this formation happened or formed in line or in the direction of the trend, which is an uptrend. That is it. So let's read what is under that. In the example above, we have a high probability setup with 4 factors of confluence. We have the trend. The market is trending up, which means the markets that we have to follow the trend and look for buying opportunity. Second, the level. The support level is an important key level in the market. As you can see, the price broke out of the resistance level. The resistance level, that becomes our support and pulled back to it, right? So let's have a look at this, right? We broke out of it. This trend, it was from the down, it got to this level, it rejected it initially, and it broke out of it. It broke out here. After breaking out, what did it do? It retraced a bit to this level. So retracing to this level, what happened? We wait for it for a pin bar to form at that level. So a pin bar is cutting the traditional support level and also cutting the dynamic what trend line. So you see the factors of confluence. So this can actually be your strategy. You can trade this and you'll be profitable forever, right? So this is how it is. So these factors meeting and then you decide. So that is what it means. Then we talk about the signal. What actually formed is the pin bar that we talked about. Pin bar formed at the support level. Another signal, the rejection of the pin bar from the support level and the 21 moving average that acted as a support dynamic support level. So it's whatever I've said earlier. Simple as that. Another example. So now we are adding to what? Our factors of what? Confluence. Now we have the traditional what? Support or the resistance line. We have that one, right? And then we have our we have our dynamic support line, the 21, also there. So we have two factors so far. The traditional one, the support level. Then we have the second one, the indicator, right? The 21, the dynamic one. That one is also there. Then we move to the candlestick formation forming, the pattern forming. What happened? Move this way, move this way, move this way. Then we got to this level. So it broke out of this resistance, right? This resistance, it broke out of it, and then we trace back to it, to this line again. Now, when you trace back to that, there was a bullish pin bar or hammer pattern forming here, right? That is, so far we have three factors of confluence. Now, the fourth one that we added is the Fibonacci retracement, right? The Fibonacci retracement is about the fact that if prices retrace to between the 50 and 60, we will look at that later. The 50 and 60, if prices retrace to that level, then there's a probability that price will be rejected and move back in that sense. So that is it's as simple as that. You can even look it up, search YouTube, other channels, and then you can have a clear understanding on this. It's simple, right? So with a fib, it's a percentage, right? There are 4 levels. We have the 50 here, we have the 61. So if price retraces to this area, within that area, then there's a higher probability that price will move up. Price will be rejected and then move up in the opposite direction. It means that price was trying to move down. Now, when it was moving down, when it got to this 50 and 60, what happened? Price was rejected. Look at this pin bar. It's the pin bar that we are looking at, right? Look at this pin bar. When it got to this level, between the 50 and 60, what happened? It moved up in the opposite direction as to the initial movement. So that is what we are talking about. It's as simple as that. So you see, we have 4 factors of confluence. Someone may stick to only these 3, right? And they'll make it. I used to use the fib. The Fibonacci, the short term for that is fib. Some call it fib. FIB, fib. So that is, initially I was using this. Now I've stopped using it. I just go the normal way. I draw my trend line, my support and resistance, and with my 50 moving average, I'm okay. I just zoom in. So you see, that is how it is. So that's what we say, trading with confluence. We are adding factors until you are more convinced. Having 2, you may be convinced, but not too convinced. So adding 3 will make you a bit more convinced. So that is as simple as that. Now, the example above shows 4 confluence levels that indicate a powerful trading signal. The first factor is the bullish trend, and the second one is the resistance level that becomes support. The third one is the 21 moving average that acts as a dynamic support level. And the last factor is the pin bar formation near these levels in line with the bullish trend. If you adopt these trading concepts, you will completely change the way you perceive the market, and you will start trading like a sniper, right? This is a special term that we use in trading, a sniper, right? A sniper will have a very tight stop loss, and then very wide or long what? TP. That is it. That's a sniper. It's just a jargon that we use in trading. Right? Like a sniper, by waiting for the best trading setups to come to you instead of trying hard to make trades happen. Right? So a sniper does not waste what? Bullets. That is what it means. Right? A sniper does not waste bullets. What they do is they wait for what? They wait for the best opportunity to strike. They don't waste bullets. So that is what it means. So let's look at the pin bar trades as examples, right? Pin bar trades example is as simple as that. So we are going to look at a number of them. This example, just look at it. I'll give you some trading examples to help you understand how to trade the pin bar candlestick pattern with a trend, and how to use the Confluence concept to confirm your entries. So this is it. We are not going to waste much time on this. You can pause the videos and be what? Looking at them to study them well. So this is what? A general downtrend, right? And now this is what forms here, right? This price, this is what the bearish pin bar, right? It formed here at this resistance, traditional resistance what? Level. Now, initially it was a support, right? Let's say, okay, wait, this is the what? A support line. So the moment price crosses over, it becomes what? A resistance. So that's what it means. Now, when it came back, as in pulling back, right? Market was moving this way. So when it gets here, it's a pullback. When it gets here, what forms here? A bearish what? Pin bar. And then there's other factors of what confluence, the Fibonacci, and then Fibonacci. So this price, what did they get? It got between this 50 and 60, right? In between them, 50 and 60. And then we have our dynamic what? 21 moving average, right? Price also what? Got there. And then what happens? So let's see what happens afterwards. So now we are going to assume that price will go this way. So let's see. So now this is the what? New Zealand USD. This is the symbol for the New Zealand dollar against the USA dollar. And this is on the daily chart. As you can see, the market is trending down. This is the first information that we gather from this chart. After the breakout of the support level, that becomes resistance. The price is traced back to this level and form the pin bar candlestick pattern, right? That's what it was in the chart about. The formation of the pin bar near the resistance level indicates that the retracement move is over, right? As in retracing going back, now it's over. So it's going to go this way. Now, and the beginning of a new impulsive move is likely to happen. When we put the 21 moving average and the Fibonacci retracement on the chart, we see that the pin bar is rejected from these levels, which indicates that this level is very important. And sellers are willing to what? Push the market lower. Here is example. In this example, we have solid reasons to sell the market. The first reason is the downtrend. The second reason is the formation of the pin bar near the resistance level, which indicates the end of the pullback and the beginning of a new move downward. The third reason is the rejection of the pin bar from the resistance level and from the 21 moving average. You see, we have looked at that already. The last reason is the pin bar rejection from the 50% Fibonacci retracement level, which is considered to be one of the most powerful key levels in the market. So let's look at what's happened in the previous chart, right? We are going to see if it actually happened by moving down. So now the same chart here, giving it some time, right? Price was this way, move here. Now this is where we got to. And this forming, what happened? Price actually moved down. So that is what we are talking about. The previous chart, this is where we go to. This is where we go to, right? This is it. So we waited for it for some time and see what happened afterwards because of this candlestick pattern forming. So you see the factors of confluence. So you can actually, for the trader, in fact, for the first 2 years or 1 year, you can actually stick to this very strategy, right? And be doing it, practice until you think it's best for you. If it's not best for you, you can change to what? Another strategy. But this is the beginner classes, right? Beginner's class. So it will be convenient for you, right? It's very simple. So let's look to this. So your support and resistance, you can add a 21 moving average and then add the Fibonacci retracement. Don't add any extra thing to this. If only you're going to do this particular strategy, trading the pin bar with the trend, the trending lines, right? With the trend. So this is the strategy that we are treating. Trading the pin bar with the trend, right? With the your factors of confluence. So that's what we are treating. So don't do anything extra to get yourself confused. As you can see in the chart above, our analysis was right because it was based on solid reasons to enter the market. This is the method that I want you to learn to be able to trade the market successfully. Look at this example again. This is the looking generally, this is an upward trend. This is an upward trend. Prices are moving up, right? Now, the first entry is around this place. The market moved this way, right? And then retrace to this point. After retracing to this level, what happened? There was a pin bar, right? The pin bar forming. And then after the pin bar forming also, what did you see? We see our fib. Price getting near the fib areas. So this is your first entry. Can be a first entry. Now moving to the second one, price moved, retrace here, it moved up to this point. That's good. Now the second one, move also back to this point, right? These are our second line. Now a pin bar is forming here. And this pin bar is also around or between the 50 and then the 61. So what happened? Boom, price moves up again. That is as simple as that. So the chart above shows two important buying opportunities. The market was trending up. The formation of the first pin bar after the retracement back to the support level was a higher probability. What confirms our entry is a rejection from the 21 moving average and the 50% fib retracement. The same thing happens with the second pin bar that allowed us to enter the market again and make more profits. This is very simple. Very, 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 very simple. Right? Very, very simple. Now, trading pin bars in range bands, So we will end here in this video and continue in the next episode. Thank you very much for watching. Like and subscribe to our channel. See you in the next video. Bye.